I mean, it was such an amazing event which led to this, so absolutely thrilled again to be on the stage with the man himself, right? Again, I've been given a very difficult job of introducing him, right? Again, rightly called as the small cap SAR, the Perm Bull by Economic Times, right? So who doesn't know him? Again, personally, we have had this conversation before, but I've always looked up to you as a person who inspired a generation in the small state called Kerala, right, to come into the world of stock market. So thank you very much for inspiring me and inspiring a lot of us who are sitting here, right? So thank you very much for that to begin with. And yeah, welcome.
Thank you. Am I audible?
Yes. When I was given this responsibility to do this today, right, I was looking into a few numbers and I found out that after your probable 10 years of stint in Mumbai, you came back to Kerala at around 1999 and he started Equity Intelligence at 2002. So it's 20 years of successful equity intelligence, if you did not know. So absolute large applause to him for that, right? So
thank you.
Yeah, so again, I would like to keep things a bit casual before we start talking about the markets, right? So I actually went a bit deep and I read what you wrote to your investors a few weeks before. So when you wrote that, you've written, equity intelligence has always been inspired by two classic traditions. First of value investing and second that of Kerala's own ancient martial art, Kalaripayattu. That's what he wrote to his investors. So, and again, we all know you to be an organic farmer, right? So what is it behind that?
I think this Kalaripayattu is something I don't know where you got it from.
Yeah, you wrote it to your investors, I guess.
Okay, yeah, you got a copy.
Yeah.
So this is a theme we are trying to make along with our logo. We are redesigning our logo and relaunching our services. Mm-hmm. So Kalaripayattu is our own Kerala kind of a martial art, which requires tremendous amount of focus and the talent.
Yep.
So these two elements are going to be the martial art. Kalaripayattu represents these two elements, and in equity investing, the same kind of this is very relevant. The kind of focus required, without getting into small current affairs, as the earlier speaker was talking about. We have to be fully focused, and those aspects of Kalaripayattu is relevant to equity investing,
right,
especially in value investing. Mm-hmm. So that's why we are going. I have a small issue. It's coming straight to my eyes. 1 second. Can I tilt a bit? Yeah. So we have the same thing. Can this be reduced a bit or something?
Right, I get it now. The point of focus when it comes to investing and being in the market is what you're trying to convey by bringing in Kalaripayattu to the equation.
Yeah,
absolutely. Now let's start talking markets. I hope that's what everyone's waiting for. I also understand there's a huge online audience watching, so definitely let's get into the market. So a lot has been happening in the market over the last 5 years, I'd say. Even 16, 17, 18 again with NBFC stuff happening, 2020 with Corona, and again 2022 hasn't been great as well, right? So what are you still doing? Still mid-cap, small caps, or any change in plans?
We are not confined to any particular class of stocks, but generally, we end up in small and mid-caps all the last, since 2003 when we started the operations of PMS. This is, our style of investing, our strategy. We end up in that space. Not that we are averse to large caps. We are times when we invested in Reliance Industries,
yep,
and many other larger companies, and currently also we have a couple of large cap companies. So it's not that we invest only in them, but predominantly we invest in small and mid caps. So the idea is, India, the structure of Indian economy, it gives a lot of opportunity for emerging businesses. Today is a small cap, and which can be a mid cap and going to a large cap eventually. So even all the large caps what we see today, including Reliance Industries or TCS or Infosys, they had a time it was small micro cap companies or business which has grown. So that is where the biggest of money is made. And there are different kind of strategies by fund managers. And there, within that strategy, we have cycles. Some of the strategies don't work always. No strategy work all the time.
Yeah.
Now we listen to Saurabh Mukherjee. He has been talking about a very particular strategy. It's fantastic. So it also may not work all the time.
True.
There will be times when these so-called blue chips can be stagnant for 5 years and 10 years,
Right.
underperforming the market. So we have seen all those kind of cycles. So no strategy work all the time. It's very important to remember in investing.
Absolutely. And again, this is a personal question I always wanted to ask you. So do you do short-term trading as well? Maybe play a bit around with a derivatives market, or is it absolutely value investing all the time?
See, as a portfolio manager, it has been always value investing for long term.
Right.
And as everybody knows, we had a couple of bad years recently, 2018 and 19. The only 2 years we have underperformed the markets, that also significantly. Otherwise, the earlier 14 years, we had, I think, some 32% CAGR for 14 years.
Yeah, that's amazing.
That was something we took pride. But these 2 years, that underperformance was very severe. We are just coming out of that.
Yeah.
So the people who invested, the retail and most investors come at the peak of market cycles.
Correct.
Which is the truth if you see last 30, 40 years.
Right.
So the maximum money came in that 2017. It's not only the market peak, it was a peak of, our strategy of picking small and mid caps. So it came together and it was a big hit. But say, for example, somebody invested, say, 2 years ago. It has grown by 2-3 times.
Right.
So, and somebody invested 4 years ago, and we have few accounts still in negative territory, to be frank.
Correct.
So people feel, I invested 4 years with you, and it did not perform yet. So that is how equity works, and
Absolutely.
some strategies work. So it is the cycle, market cycles, then the cycles of strategies, and each individual, each fund manager has got their own time.
True. Yeah, that's absolutely there, right? When you are coming into the equity market, you have to come in with the mindset that you should be okay with a few bad years maybe, but it's all, you're investing for the long term, so you'll be getting your fruits at the end of the tenure, right?
I do personally some trading sometimes. I'm a little, have a habit of trading, even in F&O, but not very much nowadays.
Okay, nice. Okay.
But I know you have been a trader and promoting trading.
Yes.
A lot of people may be enjoying it.
Absolutely.
I really appreciate the way you have been, learning it and sharing it with general public. Right. And I think a lot of people, I know your fan followership among traders
right.
is one of the highest in India, I would say.
No, as I said, trading hasn't got the kind of importance that it has got, right? It's always been confined in a room, elitist kind of a thing. People think that they cannot do it for themselves, right? I absolutely am against it. I feel if there is right education, people learn it in the right way. Even normal people can start trading. So, yeah. That's that. Anyways, speaking about this year, 2022 has been very choppy so far, right? We opened at around 17,500, went up till 18,600, came down to 15,800, again is up to 17,500 today. So the year has been super choppy, multiple reasons. Inflation rising in the US, record inflations in the US, in UK, 30, 40-year high. Then the war situation which happened, FII selling, relentless FII selling. So what do you think about the remaining of the year? Where do you see the market going in this year and a few years coming up?
See, India is in a sweet spot.
Yeah.
I think what are happening around, even the short-term challenges and, the geopolitical issues, the China plus, supply chain strategy by the Fortune 500 companies, these all are very important developments. And there may be short-term challenges, could be affecting the growth. But as far as India is concerned, I think it's a fantastic developments for, maybe it is a bit selfish to say India is benefiting from some of the negatives going around, right. But it is true. Yeah. India is going to do extremely well. I think the cycle looks like, like 2003 to 2010. We had a fantastic cycle, not only for the market, the economy cycle. Something like that is taking shape, and it has already started. Right. And there are all ingredients in place for that kind of tremendous growth. Yeah. So the broader picture is that, we are now around $2.8 trillion economy. Exactly. Yep. So there is a consensus that we are moving towards a $5 trillion economy by 2025. And definitely the target or the expectation or the estimate is at $10 trillion economy by 2030.
Let's look forward to that.
So
right?
this is indicating 8-9% growth. It's not a small thing.
Yep.
And our base has grown big.
Right.
So from today's base, 8-9% growth in economy for next 7-8 years. I'm telling you, people are underestimating Indian economy, and that the next decade going forward. We had huge challenges in the last decade. There was no capex. We had huge NPA issues.
Yeah, political instability.
The political instability and
The initial part of the last decade, probably.
That's right.
Yeah.
So things are really looking up. We have all the ingredients to grow at this so-called 8-9%. And at that level, equity investors are going to mint money in the market.
Yep.
There's no doubt about it. So this the so-called small disturbances, whether it is geopolitical
True.
or the commodity prices going up. Now we may be affected with the crude price staying that high for if it stays for a longer time. But all these challenges, I think India is very strong. Our balance sheet is very strong.
Yeah.
And we had a time, if you remember, there was no exports.
Yeah.
The 70s and 80s we hardly had any exports.
Yeah.
I think that is why the 1991 reforms happened.
Right.
I think, if I remember correctly, we had our foreign exchange reserve was just enough for 1 day's crude oil buying
Okay.
in 91. And we were forced to do the reforms.
Right.
So even though people are giving too much credit for the politicians in those days, we were forced to do that in those days.
Now, speaking about regulations and changes, PLI is something maybe worth mentioning, right? Production-linked incentive schemes across sectors, I guess. Again, that's going to put India on the manufacturing map of the world for sure, right?
Again, large number of investors may be underestimating this PLI scheme.
Absolutely.
It came on the right time.
Yep.
I think we talked about it in 2020, just before the COVID started. So this is creating huge, now, already last week, 10,000 crores worth of iPhone exported from India.
Nice. Yep.
In the first year of operations of a company, the two companies, that Vistra, the two companies manufacturing for Apple. So this is just the beginning.
Right.
And we have now this first time in India, we already crossed $400 billion of exports.
Exactly.
When we had a time, so the foreign exchange reserve is something, strong balance sheet, 40 billion dollars of forex reserves. So when things happening around us like Sri Lanka or kind of many countries, this is an amazing performance by India.
Absolutely.
So all those challenges, including inflation, you have been mentioning.
Yeah, inflation is one concern. So whenever we say, let's not be worried about geopolitical tensions, let's not worry about FII selling, those are all momentary, right? But inflation rising in the US, a country where interest rate is near zero, inflation is at 6%. In a country like UK, it's at 7%, and we are still at 6%. So one is, inflation, there is a concern, and interest rates are going to be increased. 50 basis points increase every other month, as we are looking at a huge interest rate hike in the US. Number two is, inflation, is the Indian numbers actually telling the truth? I'm concerned. I'm looking at around and I'm seeing the prices going up everywhere, but our Indian inflation numbers are still at 6%. So, what do you think about that?
See, there is a rising trend of inflation globally.
Yeah.
We have to live with that. This could affect the growth of companies, profitability in that cycle. But this will not be a structural issue for India. As I told, Indian balance sheet is very strong with 40 kind of billion dollars of forex reserves. It's very strong. We are ready to, meet any of these kind of challenges. And so everything, all those ingredients are pointing towards a huge, at least a 10-year cycle for Indian economy and especially the stock markets.
Yeah. So I guess one thing we should all derive from his talk so far is I mean, whatever I ask him, his focus is only on the long term. I mean, I put him, geopolitical stuff or what's happening in the US, or, I mean, every time the focus is only on the long term, and that's exactly the kind of mindset I think you need to have to succeed in the market, right? Or to only be focused on the long term. And again, when I hear you being so bullish on India Inc., so I think that's why Economic Times call you the perm bull, right? So that's
Yeah, this is not only me, you know, all the serious market participants, they are very bullish on India. Looking at these ingredients, not just blindly getting bullish, you know, some people may be getting bullish being patriotic, but in a stock market investing or economy, we cannot take those kind of views.
Right.
These are based and, you know, backed by real fundamentals of India.
Absolutely.
Looking forward.
Yeah.
So I think if we talk about $10 trillion economy by 2030,
Right, absolutely.
then that is the view. I think almost all the market participants are coming to this kind of the line of thinking.
Right.
That is one reason for the high valuations of, or the high price earning multiples for Indian stocks or the market in general. And that is going to sustain.
Got it.
And we are, you know, see the profit, the corporate profits to GDP ratio. That ratio was something like 5. In 2018, in 2008, we had a corporate profits to GDP of 5, which has come down to 2 in 2020.
Okay, nice.
From there, we are moving up very fast. So this will go back to 3, 4, and 5 in the next 2-3 years. So that is also going to make a huge, that is the reason for these high price earning multiples for Indian stocks in general. So maybe FIAs are not realizing that.
Right.
And they have taken a view, a lot of them have taken a view that the market is richly priced, or some of them may be feeling there are excesses and overpriced. So that's the reason we have seen something like 1.5 lakh crores of FI selling in the recent past.
Correct, that's true.
That's a big number.
Record selling happening.
That's a big number of that, what people believe. I'm telling you, this is not any big number. When we consider India's economy, the structure of Indian economy, now more and more people coming to the stock markets.
Yeah, that's something.
You know, around 1 lakh crores of money was pumped in by the retail investors in India during the same period.
Yep.
And around 78,000 crores of buying was done, net buying was done by domestic DIS.
Yeah, DIS.
So this 1.5 is not very big, but psychologically people are not accustomed to such large amount of selling. So, I feel the retail participation is not, again, cannot be underestimated. We had 3.6 crore demat accounts in 2019. And now it has gone to 9 crore.
Yeah,
that's a number. So this is a huge surge in the people participating in the markets. But one challenge, all that new money coming in, most of the newbies in the market, they are little not caring for the valuations.
Yeah.
They are going after momentum
Right.
and fancied sectors and companies in the market. So that may not, but they will learn in the process.
Correct. That's something I also believe. They have to go through that process, everybody. They have to probably burn their hands, lose some money.
They have been overlooking at valuations.
Yeah.
So that's a very, that's a trend I have been noticing. That's one reason, stocks have been continuously rising 5 times, 10 times, and then come back by half.
Now that you've mentioned about the beginners in the market, probably a lot of them are watching online as well. Maybe we could get into some actionable insights for them. So any specific sectors that you're bullish on, given the fact that we talked about PLI scheme already, PSU sector on the background of privatization happening. So any specific sectors on your mind?
Public sector is very important. This could be a theme for the next 1-2 years. Again, how many PSUs India has?
Yeah.
The public sector companies. Can anybody guess? We have 1,825 PSUs in India.
Yeah.
Some 25-30% of them are not operational. And I think 1/5 of our budget allocation is going to these PSUs. Most of them are bleeding. So we know some of the listed entities which are doing very well.
Right.
And so I think the privatization of PSUs is in the right direction. We need to come out of this. Mostly the politicians and bureaucrats, the corrupt politicians and bureaucrats benefit out of this. So monetizing them and, giving it to the private sector makes a lot of sense. They can be run much better. So for stock investors, I feel next 2 years, this is a fantastic theme to invest in or trade or whatever. And, within which we have got fantastic companies which will be continue to be under the government fold, like the defense companies or electronics like BEL or maybe the HAL. We have wonderful companies. Now LIC is coming into the back. So, and a lot of them will be disinvested. So disinvestment of these companies like BEML or what do you call, there are Bamal Lorry, there are many small companies are also getting disinvested, maybe some fertilizer companies like RCF. So I think investors should have a serious look at some of these smaller PSUs which are doing not so great because they are under government management. So once it goes to smart people, maybe Ambanis or Adanis or Vedantas, Tatas maybe taking, or maybe some MNCs could be coming to India and buying them out. So the fortune of those companies, if it is into any relevant business, they can do very well. They can be multi-baggers. But I don't want to tell any particular names.
Got it.
I think PSUs as a theme is going to do very well for next at least 2 years. But some of those PSUs are irrelevant. Even though you may find them very cheap, maybe the business is not going to be futuristic or it will be difficult to revive. Such companies could be avoided in any case. Yep.
Got
That's
it.
about PSUs.
Definitely. And again, speaking about actionable insights, everyone knows that you are a value investor. So any secret mantra or a tip that you would love to give to beginners who are watching online probably?
See, recently I was noticing the IPOs coming in.
Yep.
Those companies are valued much, much higher than the listed companies.
Yep.
And all these new investors were going after the IPOs because they were marketed well. Media have been covering, and so there were vested interest playing behind them. And some operators, we call them jockeys. Some jockeys may be buying it out and taking up the price in a big way. Basically, price manipulation. So all those things are happening around a lot of IPOs. Some of them are fantastic business, not that they are bad companies, but for everything there is a price. That's the first thing to be remembered by the new investors. A company is very good, they have got a fantastic future, doesn't mean you can go and buy it at any price. So these price earning multiples are relevant, the net profits are relevant, the projected profits or cash flows, everything is important. You cannot ignore any of these things. And most importantly, in a disruptive world out there, how relevant is the business or the products of those companies? That's the most relevant. And this question was not very relevant maybe 10 years, 15 years ago. So today we have around 4,000 companies or maybe 3,500 companies traded. Half of them may not exist after 10 years. It's a very serious thing. So the permanent loss of capital could happen. So that's very important, and always give importance to the valuation. When you buy a stock, at a particular price, when somebody buy Paytm at 500 rupees, just taking an example, it's a recently hot stock. Everybody got affected, all the investors lost money. I think most of us, many people were bearish, including me. I was surprised about the valuation at which it came, it brought the IPO. It has come to some 1/4 of the price.
Yeah.
So even at that price, people buy at 500 rupees. What is the valuation? You cannot buy a company at 500 rupees. It has got a market capitalization. Many small investors totally ignore, they don't understand what is the market capitalization or what is the market value of the company. They go by the ticker price,
Correct.
That's maybe good for trading, for intraday trading kind of things.
Right.
But investing is important. So the valuation, don't overlook at valuations, whether it's a fancied sector or a company, or it's a traditional company with a lot of assets. All the companies need to have that valuation metrics in place. Yeah. Yep.
So I really appreciated when you wrote this. When you were talking about loss-making IPOs, on Twitter you wrote this: turnover is vanity, profit is sanity, but cash is reality. I mean, that really, touches on very deep levels, right? I mean, in a day and age where IPOs and valuations are being done so crazily, this makes a lot of sense where you have to actually look into cash because cash speaks above everything else, right? And again, there's one personal question I wanted to ask again, and this would probably help me in my investing as well. When we like a new company, how do we allocate capital to that out of our portfolio? Or how many companies is good enough to be in a portfolio? Because I always feel that whenever I made a portfolio of probably 15 companies, then after some days I like another company, then if I start researching again, I like another company. So that's a never-ending process, right? When does it end? When do you feel that, okay, I should stop my research? So how is that process? I mean, very actionable for me specifically, and I'm sure for others as well.
Typically in my portfolio, for the investors and even for myself, I have a policy of having around 10 stocks.
Okay.
At a given time. Maybe 8 stocks or 10 or 12 stocks. So that's something I have been practicing. It evolved as it is, not with the intention to keep 10 stocks. And some investors used to go for 100, 200.
Yeah.
I know people with 500 stocks in Cochin.
Right.
That's
very 500.
Not very large portfolio, not large amount. Still 500 stocks in the portfolio.
Right.
So even if some of the stocks what he identified goes by 5 times, there won't be any big difference in the total thing.
Yeah.
So concentrated portfolios make sense to make big money when you go right.
Yep. But again, so what's the logic there? How do you stop at a point? I mean, wouldn't you always find another good company? So that goes up from 10 to 11, then another good company goes to 12. So do you actually put in conscious effort to stop researching when you have 10 companies? Or you exit a company?
No, you see, in our market, now new stocks are required because the time passes, maybe some of those companies might have gone to rich valuations. So we may go into new companies, new stocks.
So you exit.
Yeah. So totally in our PMS, we may have around 25 stocks.
Okay.
But typically one client will have an average of 10 stocks.
Okay. And then again, another actionable question would be, this is a famous saying in the market, right? Entering is kind of easy, but knowing when to exit is difficult.
You are listening to Saurabh Mukherjee.
Yeah.
There is no question of exiting.
Yeah, again,
sometimes,
super long term.
Yeah,
right?
but at the same time, in a dynamic market like India, it makes sense to have reasonable churning and, taking advantage of the short-term, medium-term excessive price movement. So an investor can exit when you see a stock moving by 2-3 times without significant change in the fundamentals. Maybe the stock is still good, but there can be time-wise correction. Sometimes the stock moves fast 2-3 times, then it stays there for 5 years.
Correct, yeah.
So somebody can shift the money into more productive, more growing stocks.
Right, sure, yeah. And then I was going through your Twitter where you are super vocal. So one thing I really want to talk about is the loss-making IPOs, which again you are very vocal about. So that's something that we have already covered. So as you rightly said, price and cash. So the real fundamentals are what we should look at rather than any vanity metric. But going ahead to something else that you said with a lot of importance, 90% of unicorns are bubbles waiting to burst.
Yeah, in that mode I might have talked. I was very apprehensive about these new issues.
Yeah, that's what. So I'll make the question maybe a bit more clear for you. So when you see IPOs from this so-called new age startups, tech companies happening at such high valuation, do you think that the private market valuations are crazy high? So is it because of VCs and PEs entering the market who are pushing up the private market valuations and then dumping it off into the public market?
I think that space is going through too much of manipulations and unethical practices.
Yep.
In many cases, I know promoters, VCs, earlier investors, and the new upcoming investors, operators, not investors, they all collude, and sometimes maybe in the IPO pricing could be reasonable.
Yeah.
But after the IPO, it is getting rigged up and, by jockeys
Correct.
and this is possible only because of the newbies are after these fancies and they can be misguided easily.
Correct.
Which is a very unhealthy system. I don't know, regulator cannot do much about it. These all are legally happening, technically legally.
Right.
So nobody can help it. I think that tweet I made during that Paytm IPO, where I was feeling it's overpriced.
Yeah. No, it was a common feeling for a lot of investors across India, where again, I'm just re-establishing what you've been saying, where it doesn't matter if the company is a new age tech startup or an old company, what matters at the end of the day is its actual valuation and cash, right? So that's what we should look at for sure.
Again, these unicorns and all, mostly in the technology sector, we cannot underestimate the technology boom.
Correct.
Again, going to happen.
Correct.
The next stage of boom happening in India. We are on a very strong wicket in
Correct.
this. All these disruptive technologies like 5G or the automation, genomics.
Correct.
And everywhere, India has a huge role to play. And this is one most important ingredient in India's economic growth going forward.
No, that's exactly what I wanted to ask next.
Now you just take your Bangalore, where I think Sharique is in Bangalore now. So Bangalore is the most important, that startup ecosystem in the world after Silicon Valley.
True.
It's not a small thing.
Yep.
So we will be having more hubs in India coming up. So the technology world is going to be, India's.
Right.
Already we have a very dominant role to play.
Definitely.
So, but in our economic growth, this is going to be very, very big.
Yeah. So since we are mentioning about new age technology, so let's anyways address the elephant in the room. Let's talk about blockchain, cryptocurrencies, and Web 3.0, right? So again, I read something which you very interestingly wrote, where you said that in your last 31 years of career, a single person in your village hasn't come to you asking for equity investing. But all of a sudden, people are coming to you asking whether they should invest in Bitcoin, right? I mean, that's the kind of shift that we are seeing, right? So what do you think about that? What are your thoughts about investing in crypto? Do you do it personally? What are your thoughts?
As on today, see, I'm not an expert in that, but all these people investing in India today in crypto, they are only gambling. They don't understand it. 99% of them do not understand. They are only gambling. So as on today, it's a gambling instrument. And I personally never believed in a currency. If you use the word currency, only governments, sovereigns can issue currencies. Warren Buffett, many others also have talked about this. So I don't believe in that, and I will never invest in this. So he was showing me some statements and all. So I scolded him. See, so I was very much against that.
Right.
And he was very sad, and so after many years, he recently called me when it crossed $10,000, not now, a couple of years ago. So then so he was very sad even that time. You scolded me when I talked about this. So I told, I still have the same stand. I can't help it.
Right.
So he is still holding some of that, even though he sold mostly at 10, 15, and some at $150.
Nice.
So it's a principle which I don't do what I do not understand.
That's great.
So if that is the policy, I don't think this Bitcoin will have this kind of a fancy today.
Yeah, so that's a very important sentence that you said. Don't do something that you do not understand, right? So when we say that even in the stock market, derivatives market, numbers say that 95% traders or stock market participants lose money. So I feel that they lose money in the stock market also because they're doing stuff that they do not understand. A lot of people do not understand how to value stocks. They still invest into the market, right? They don't know how to do maybe day trading or F&O trading. They still try their hands because someone on social media or someone said there is an aspirational value. So people lose money in the stock market also because they are ignorant. They don't understand it. Similarly, in the world of cryptocurrency also, people are losing money probably because they are doing stuff that they do not understand.
And cryptocurrency is difficult to understand.
Yeah, true.
As somebody was telling you, there is fundamentals, there is intrinsic value, there is more clarity when you analyze a stock.
Right.
So there is no doubt about it. And one more thing, we were talking about this newbies. A lot of them I know, those who entered into 2020, maximum people started entering into the stock market. New people. A lot of them made big money.
True.
And I know a lot of them, maybe 50% of them have started investing on the other side.
Yeah,
So those people are doing well.
correct.
And others will be learning to do that. So anyway, new people coming to the market is very good, most welcome. This 9 crore accounts, it can still go to 15 and 20 crore accounts in India.
Yeah. Still the stock
That's where
market
the real game will start.
the penetration in India is only 3% of the population. So
Yeah, it has gone up.
Yeah,
It's gone up now.
oh,
It was
right.
3%.
Yeah, still a lot of
In the last 2
upstream.
years, it has gone up in a big way.
Correct. Yeah, that's true. So again, crypto investing, I mean, see, when we say that we do not understand it, I always feel that people do not understand how money works also. That if you actually go out and ask someone how, on what basis money is being printed in India or in the US and how the actual economic system of the world works, people do not understand as well. So I think it's just a matter of time. As time passes, cryptocurrency might become the new normal. So people would just take it for granted, wouldn't start asking questions about, hey, how does this exit, what it is, just like they're not asking questions regarding actual currency now also. And again, regarding the term cryptocurrency, which you also do not agree with, right? It's okay. I mean, even I stand with that, because if you call it cryptocurrency, people will actually relate it to becoming a currency. Where in today's world, cryptocurrencies are mostly not currencies. People agree that they're just tradable assets. They have some utility attached to it. So that's a different story altogether. So I would kind of conclude the session by again picking a bit of your brain, where you yourself said that in the last 5 years, 2-3 years were not that bad, not that great for your fund, right? I mean, your AUM was going down, maybe a number of users were kind of going down, which is absolutely okay. I mean, it's about the equity market.
I don't mind the AUM going down and all. My problem was 2 years, 18 and 19, we had significant underperformance.
Correct. Yeah.
Anyway,
which is okay with the market, right? So 2 questions there. So one is, how are you? Do you get stressed at that point of times, and how are you managing stress?
I feel bad, and I'm not a businessman structurally. So, I have been very passionate about it.
Right.
So the clients are happy. I'm always very happy. That's the only thing I'm looking for.
Correct.
Anyway, things are really looking up.
Absolutely, I'm sure.
I'm telling you now, the global events happening, including these geopolitical issues, and the COVID, what happened. See, the Western supremacy is coming down. That's almost very, very clear. The Asia, especially India, is going to be shining. There are all the ingredients. Now with this, the China, even a small portion of Chinese business moving to India, along with this PLI scheme, all these things happening at the same time, at the right time.
Correct.
That's why I'm extremely bullish if you see the next 5 years in India. And even the Eastern Europe, what's happening? I'm just telling another example. Eastern Europe has been cheaper, labor and manufacturing. So there's a huge activity happening in Eastern Europe. That is also got some kind of disruption. Again, going to help India. So, and India's current regime has initiated many of these themes with many of these financial reforms like GST, RERA, IBC, the banking reforms. These all are historical, and all the effects are about to start. And we have introduced the PLI scheme. PLI scheme is going to create approximately 5 to 6 lakh crores of revenue, additional revenue, on a normal year after PLI. So this is, again, people are underestimating.
Correct.
So everything is pointing towards a fantastic future for equity investors and Indian economy for the next 5-10 years. I'm very confident about that.
Yeah, I was planning to give a conclusion, but you have given a much better one at that, so I wouldn't even try doing that. So anyway, such a fun, I'm absolutely thrilled having this time spent with you. So again, a living epitome of success in stock market from Kerala. Again, a state with such less penetration, a man to come out and build a personal brand for himself in this field is absolutely commendable. So thank you very much for being an inspiration that you are. We are spending time with us. So thank you very much. We could probably take a few questions from here.
Thank you very much, and appreciate Dhanam magazine and Korean and Maria, the way they have been working towards the financial sector of Kerala, this geography. It has been wonderful, and thank you for giving me this opportunity. And including me, I think all of us are hungry and waiting for any other programs now.
Nothing at all.
It's
Just
for
in
dinner?
case audience has a question, we can probably quickly take one question. Okay.
Yeah.
We
Please.
have an enthusiastic hand there, so. Mic is coming to you, sir. Just give me a moment. Yeah.
Sir, question is to you. You are a man of small cap and mid cap. In 2018 to 2020, there may be only one, maybe few stocks has performed. It was an underperforming for small cap and mid cap. But the scenario for 2020 to 22 is different. So are you still a mid and small cap man, or have you changed your mindset to broader market?
I think currently our portfolio is maybe 75-80% mid and small caps. And we are very comfortable. And you know, that structural change happening in Indian economy, especially we all talk about, you know, the transformation from the black to white economy, the unorganized to organized economy, is very relevant even for the small and mid caps. See, the listed companies in general are doing organized business. They have been always paying the taxes. So they have been competing with the unlisted, very, very small SMEs. So that movement is good for, in general, all the companies listed, if they are into the right business, a relevant business for the future.